please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, then we have PNB's numbers. The net profit has come in at around 230 crores. Now, that's a sharp miss in comparison to the number that we're looking at. We were working with a number of around 560 crores. By the way, the gross NPAs, if I take a look at it on a sequential basis, there appears there is some improvement. So that's good news, actually. The asset quality on a sequential basis has improved by close to around 90 basis points. That's the net NPAs, and the gross NPAs is more than 100 basis points. So the net profit, that appears like a bit of a miss, but it appears that the asset quality as well is a tad bit better. So that's good news. And remember, in terms of NII as well, we are working with a number of around 4,112. I'll try to, and 22.
There's a miss on NII front. Now, the NII is at 3,988.7 crores. So that compares to our poll of 4,122.9 crores. So slight miss on NII. As you know, the interest income is remaining tepid. Interest income has grown by just 1.6% YOY and declined by 1% quarter on quarter. So due to lower interest income and your cost of funds remaining same, NII has been tepid, and therefore it has missed our poll.
What
in terms
asset quality?
Absolute numbers, on the gross NPA, it's coming at 57,519 crores. I think which is pretty flat actually if you see on a Q-on-Q basis. The net NPA has come in at 34,000 odd, which is also, I would say, pretty flat. But as a percentage of the book, their asset quality has seen a significant improvement. I mean, almost 1% on the net NPA. The gross NPA has come in also at the 12.11% mark. Abhishek, your comments?
So the operating profit growth is very strong. So you look at the operating profit, it's at 4,245 crores. So if you check on a sequential basis, that is up by 34.6%. While if you check on quarter, it is up by 28.7%. So that's despite the fact that your NII has not grown as high as that, operating profit growth seems to be pretty steady as other income remains strong.
I would generally think that the NPA has not shrunk. That will still be a spot of bother, which will mean that much has to be provided for. I'm still waiting to see. I'm not able to open the. If you're able to get the provision coverage ratio.
Provision coverage ratio is at 60.78%.
Okay, that's still better than the 59.2 they did in the previous quarter. So an improvement in provision cover is always useful. Actually, now I think we have to revert to what they tell us in the press conference or in the press release. We have to see how much the slippages are. On the face of it, this looks like an improvement. After all, there is a 1 percentage point fall in the gross NPAs and in the net NPAs. So at the moment, it does look like as decent a figure as you can possibly get. Okay, I think now we have the total assets as well. The advances quarter on quarter have grown significantly, looks like. Okay, we don't have the quarter on quarter. This is a year on year figure, as well as a March to current quarter. They have seen a fairly decent growth in advances by about 40,000 crores. So that as well is perhaps a positive.
Just to take your point forward, Lata, if you look at the YOY, the loan growth is at 17.2%. But if you check on sequential basis, that is quarter on quarter, the loan growth is at 10.2%. So that's a pretty high. And this is why we are seeing the gross NPA ratio decline, despite the fact that your numerator, that is in absolute value, gross NPA remaining flat. The drop in the percentage is due to the strong loan growth. Loan growth has been at 10.2% quarter on quarter. Due to the denominator rising, the ratio has got compressed, and that is why you are seeing gross NPA at 12.1 versus 13.3.
Okay, well, I just wanted to add a caveat over there, which of course you know, but just put it on the table. Both year on year and quarter will look good for all the banks because the previous quarter is slack season. Monsoons, cement, power, mining, sugar, none of them are working. And in the third quarter, all of them are working. So quarter on quarter will always look good for banks in the third quarter. And year on year, this time it looks good because last year, same quarter, banks were not lending at all. They were only changing notes. Okay. So everything looks flattering now, but that's only with a reason. For me, that 57,000 crore NPA will continue to stare as a problem. And, maybe you want to see what the other income losses are. there should be treasury problems that all banks will encounter. And I don't think it is going to be only this year. Other income will have a problem, or other treasury income will encounter losses, mark-to-market losses and provisioning because of the fall in bond prices. So, there are other pain points which will not go away in a hurry.
But Lata, if you look at the other income, it has come in at 3,082 crores. That compares to a gain of 22.6% on a YOY basis and close to about 62% on a sequential basis. So they must have shifted some part of the treasury from held to maturity to about tradable securities like held for trading or available for sale category, and that is how they must have got a booking.
No, yeah, it's possible this is the PNB housing finance impact or whatever. They have other income, other sources also where they have made money.
Also, that loan growth has been strong. So fee income may have been strong because your balance sheet is growing, and that should actually aid in your fee income also.
Well, I guess under the circumstances, there isn't any bad news just yet. We will have to really wait for the slippages figure. Treasury operations, as you point out, the segment results show that revenue has slightly gone up year on year, but not by a whole lot. Treasury losses we will know only when we quiz the company in the press conference. At the moment, it looks like a decent set. Let's wait and see what they have to say in terms of fresh slippages.
In fact, the management is getting ready to speak, but before we cut to them, let's just get in a quick comment. Our Sri Shankar of Prabhudas Leeladhar now joins in. Sri Shankar, thanks very much. I think you've had time to go through the numbers. Anything that strikes you? How are they looking to you overall?
Unfortunately, I don't have the results in front of me. I'm also eagerly trying to look at for the results.
Okay, let me just give you the highlights. One is that the net profit has come in at about 230 crores. On an absolute basis, the gross NPA and the net NPAs are pretty unchanged, actually, quarter on quarter. But as a percentage, the gross NPA has come in at 12.11%, which is an improvement, and the net NPA at 7.55% as well. Abhishek tells us that loan growth has been strong at 10%.
The interesting point to note will be what is going to be the PPOP, what is going to be the provisions, and what's going to be the slippages. So that's the data I'm looking at.
Okay, but a word on the asset quality.
Improvement.
Sri Shankar?
Yeah, I'm sorry. We were expecting around 3,400 crores of PPOP. So I'm clearly looking at what is the PPOP number that we have actually come out with, or the bank has come out with. So that's the reason why I'm just eagerly looking at that number.
Sri Shankar, the operating profit is at 4,245 crores. That's a growth of about 34.6% on a YOY basis, while on a sequential basis, it is up by 28.7%. So that's a pre-provision operating profit that you're talking about. I just read out the same for you.
And the provisions?
The provisions have increased to 4,467 crores, but over that there is a caveat. Provision for NPA is at close to 3,000 crore versus 2,700 crores. So slight increase in provision for NPA. I guess it's more to do with other provisions. Other provisions have increased. If you minus, you get about 1,700 crores of other provisions that have increased.
Actually, the NPA.
It will be interesting to know. PNB has got a huge investment book, so investment provisions also would be key.
Around 3,000 crores. So it's a marginal increase in NPA provisioning. The other provisioning is for perhaps other reasons. I think the big gain they have made is only in other income. I think the sale of shares of the housing company, housing finance company, that is the only thing that has improved the operating profit. Otherwise, if you looked at expenses, it's not as if expenses have gone down at all, or employee expenses. So there isn't an general operating profit. It's not as if that they've become more efficient in any way. It's encashing the investments in the housing finance company that seems to have advantaged. Hasn't the company started speaking?
No, not yet. We also have Lalitab Srivastava of Sher Khan with us. Lalitab, your first thoughts on the numbers?
Hi, thanks. So I understand that we are not at that position where we will be very critical on how the asset quality, should have performed. But the fact that, despite we don't have the slippages number, asset quality has been, fairly stable. That is one positive point. Another positive point I would take out is that at least on the provisioning requirement side, 854 crores out of 1100 crores requirement has been already done by the bank. So that is these are the two positives that I would be taking out. On the P&L side performance, I think performance seems to be in line with what we were expecting.
Okay, all right, Lalita. Lalita, all right, I think we have Manish Otswal as well who joins in. Lalita, just stay with us. Manish, I've had a look at the numbers. We have the net profit that's at around 230 crores. The loan growth that we're expecting double digits. I think it's coming at around 17%. And asset quality, I guess, more or less flattish on a sequential basis. Your take on these numbers, Manish?
So these headline numbers, especially net interest income slightly lower than our expectation and even the street expectation. As far as the core operating profit is concerned, there is one element included in the other income, which is sale on equity stake sale on profit on PNB housing. There is 1231 crores. If you knock off that number, then the core operating profit is broadly in line with the expectation. As far as the asset quality is concerned, asset quality is sequentially stable, but we need to see what kind of slippage they have reported in this quarter compared to the last quarter, and that number will be very critical. Because if it is driven by the return of assets or something of that sort, then the headline may not look good.
Sri Shankar, are you still there with us?
Yep.
Just wanted to check what's your rating on this stock now, and what's the key that you'll want to hear from the management?
See, key is going to be where is the sudden growth came from, number one. Number two, how much of slippages are there in this current quarter? And third, where is it? The direction that they have gone to. The whole issue is, okay, these numbers may look good because your denominator has suddenly gone up. The strong growth numbers in terms of 17. So all these ratio will look little muted right now. But that's because of the stronger growth. And clearly, it's going to how much is the slippages. And I think we need to wait for the analyst call before we jump into any kind of conclusions.
So if you check, the key highlight or on the negative side in this result is that for the first time they are reporting a PBT loss. That is after 7 quarters. In the last 7 quarters, in last 6 quarters, they had been reporting a profit level at PBT, and this is the first time in 7 quarters that they are reporting a PBT loss, and that is led by lower income. The income is clearly on the weaker side, despite the fact that your balance sheet has grown robustly compared to sequential or YOY basis, but there is no income front. So obviously, there is stress in the balance sheet, and that is leading to lower income, as we have seen with interest income that has remained tepid or declined by 1% quarter on quarter, despite the fact that your loan growth is at 10% plus on a quarter on quarter basis. So overall, while there is pain in the P&L, stress assets remain elevated. Earnings, in my view, from brokerage's point of view, earnings are not up to the mark that they were expecting, and this PBT loss will not be taken kindly.
Okay, all right. Great. Thanks so much to all our guests for stopping by and for giving us those details. Thanks, Abhishek, as well, for stopping by. We'll wait by for a lot of clarity from the management. How exactly did the loan growth come in at such a fast clip, and what exactly is happening in terms of the asset quality as well? For the time being, the stock is under pressure, though at least on the Nifty, you've seen a bit of a recovery as we speak. We're gradually moving towards the 10,400 odd mark. Some of the technical analysts in the morning told us that you could expect a bit of an uptick from around the 10,350. So let's do just that. We'll slip into a short break. You come back. We'll get chatting with Prakash Gaba as well as Rajat.
Well, for the market, it's down about 880 odd points now on the Sensex. So 2.5% gone on the frontline indices, and the Nifty is close to that 10,400 odd mark. So what do you do now intraday? Prakash Gaba and Rajat both join in with their trading ideas. Prakash, good afternoon. First to you. So there's a bit of a recovery in the market, but you think it's significant enough to change the intraday call?
No, I don't think it's, good afternoon to you, I don't think it's significant enough, because what we are seeing is we saw a gap open, yes, but we did not see a follow through, which basically tells me maybe the downside is done for today. So we might get a bounce. So you can play this bounce purely for intraday, but the larger trend is still down. So if it goes up, and I will say that's on the Nifty, 10,560 is a stiff resistance. So those are the zones where we can create shorts for a further down move to maybe around 10,100 zones. So if you're looking at a slightly larger move, it's down. Shorter move could be up. Who knows where it goes?
Okay, all right. Then, by the way, just pull up the intraday chart. The Nifty is at around 10,400. I was looking at the US futures actually. If you could get, maybe the S&P 500 futures up for you, it was indicating a sharp cut just at the start of the show and even earlier this morning. Well, let's get it up for you. That's indicating a rather flattish one right now. We need to see what exactly is, the volumes as well on that picture. And our ticker team as well is alerting us. The Dow futures have recovered considerably. But we'll keep an eye out on that front. I think that could explain why we're seeing such a big recovery in the Nifty, the Sensex, as well as the mid-cap index. All of them have recovered considerably from the low point of the day. The Nifty Bank, from being down by close to around, 900 points, that's down 750 points. The Sensex was down 1,100 points. That as well has recovered. And I think this could be one reason. But keep in mind, we have the European markets yet to react to yesterday's sell-off. So, they should open up as well. And that is indicating that we'll likely open up with a downtake. If we can pull up some of the European market futures, let's see whether or not it's trimmed its losses. I think 3.5–4% is what it was anticipating. Now it's anticipating around 3.2%. So we'll keep an eye out on that front. At least some solace for the bulls, some kind of a recovery from the low point of the day. 10,400, I'll tell you what, if we can close up at 10,400 by the time we are done today, the bulls will really be happy with that one. But Rajat Bose as well is with us. Rajat, how are you reading the index? What's the trade on the index at around 10,400?
See, I would say that unless the Nifty recovers either today or maybe in a day or two and scale up to something like 10,600 levels, then there is no point expecting much of a recovery, because there was a gap between 10,566 and 10,588. This 22-point gap happened when the market was going up, and while on falling, again the gap has been. So this later on, if it is not crossed immediately, it would be considered an island reversal, but an island reversal of a very rare kind. So unless that zone is taken out, that is 10,600 is scaled back immediately or very soon, it would not be prudent to actually go long. Sell-on rallies in the Nifty would be a better deal. Today there is a possibility that maybe 10,425 to about 10,430, that is the kind of level it can scale up to again. But after that, again, some selling might happen. And one more thing I would like to highlight, Nigel, here is that this is somewhat reminiscent of the 2008 fall, that 6357 on 8th of January to about 4448 on 22nd January 2008. After that, this was a 1900-point fall, and after that there was an 1100-point rally up to, say, 4th of February. So this kind of sharp bounce back, if it were to happen, that would signal that the character of the market might be changing. And a gradual scale up going forward over a period of, say, a couple of months and rescaling 11,000, that would signal that this was just a bull market sharp correction. Back to you, Nigel.
Thanks for that, Rajat. In fact, it's a good lesson for all of us to know as well. Prakash, in terms of stocks, what are the ideas?
Two stocks in both short. I'll go with Axis Bank, that still looks weak. The risk-reward ratio is in our favor. It can slide to levels closer to 528, stop below 544, above 544. Indian Oil is another stock that looks weak to be. It can see a slide to levels closer to 395, stop above 405.
Okay, all right. So those are Prakash's picks, but let's get in Rajat's picks as well. Rajat, what do you have for us?
I have two sell calls and one buy call. First, the buy call, that is Voltas. Voltas, if you look at the chart, it falls in tandem with the market, but whenever it falls, there is some buying activity, and it tries to post a wide body. Yesterday it did, and today also it is trying to do so. So I've kept a very small stop loss of 582. If that gets taken out, then get out of the stock. Otherwise, 592 to about 595 possible on the upside. Voltas showing better relative strength. And my sell calls are Grasim. Sell it with a stop above 1038. 1025 and 1020 are the two targets. And finally, Adani Port, that's also a sell call put a stop loss above 399, 390 and 387 are the two targets. All three trading calls are intraday. There is no point carrying positions overnight given the kind of volatility that we are seeing.
Okay, all right. Thanks so much, Rajat, as well as Prakash, for joining in and giving us those details. By the way, a couple of mid-caps. Kolte Patil, just one stock I wanted to point out before we slip into a short break. Kolte Patil has recovered considerably from the low point of the day, and Aegis Logistics as well. That's the other one I'm looking at. Volumes picking up on both these two counters. Some green after a while. Aegis Logistics as well should come up for you. Well, we'll slip into a short break. You come back, we'll shift focus from the equity market. We'll focus on commodities. Stay with us. Well, I think we have cut that break because we have Ramco Cement's numbers that are flashing for you on the screen. The net profit number has come in at around 23 crores. That compares with around 150 crores. Just to tell our viewers that, the circumstances in South India wasn't very, very favorable in the past quarter. So that could explain that. But we are waiting by to see what exactly is the top line number over there. So let me just try to open that up for you on the screen. Remember, it's been a big outperformer as well in the last few years. We don't have that number yet, actually. I'm struggling to open this this release. That should come up for you. But as of now, we have only that number. Remember, they're undertaking an expansion plan as well. So the street will start factoring in that. Okay, I have, the disclosed number that they have given up for us. The sales volume for the quarter, that's coming at around 2.2 million approximately. That compares with around 2.15 million. The revenues, that's coming at more or less flattish actually, and the operating profit that they've calculated and given us, that's come down sharply. It's coming at around 240 crores. That compares with around 309 crores. So just, we should get those numbers as well. Yes, they have calculated it. And so it's a weak operational performance. It's a flattish top line number. And what it's telling you is when you have sales volumes growth that is there, there's sales volume growth. And in spite of that, the top line hasn't grown. That's telling you that, in fact, realizations were under some pressure. In addition to that, we have input costs as well have gone higher. Pet coke prices have moved higher. Coal prices as well have moved higher. So that's what's led to weak operational performance. And that explains why, in fact, 240 crores, it compares with the sequential number of around 296 crores. And on a year-on-year basis, it compares with a number of around 305 crores as well. So that's why, in fact, that stock is down close to around 4.5 to around 4.85% now as we speak.
At commodities now, where the only bright spot really has been the precious metal space, which are trading in the positive. Joining us to talk more about that is Sumit Bagaria. Sumit, hi. As I said, the only place where you have seen some green is in the gold and silver prices. What is your sense? Is it just a safe haven buying, a knee-jerk reaction, or do you see it, extending itself further?
Hi, Manisha. Good afternoon. Well, I think this is a fresh buying which we have seen in gold and silver. As far as both the precious metals are concerned, I think immediately we have seen a good buying in gold. And technically also, gold is looking strong. I think one can initiate long positions in gold April contract at around 3,500, 3,550 levels, with a small surplus to be placed at 3,350 on lower side. And on higher side, immediately we can see levels of around 3,800, 3,900 in next couple of days. And overall, there is a possibility that we might see levels above 31,000 also. So overall, both the commodities are looking good on charts. One can initiate long positions.
And the crude oil prices, the kind of reaction or the correction that we are dealing with on that one, how long-lived is that? Do you see a bottom anywhere in place? Because we are nearly $4.50 off from the 2018 highs itself.
A small correction is possible from present levels. In last 2 days, we have seen a correction of almost around 150 points or so. And from here on, there is a possibility that we might see a dip of around 100 points. So for a trading perspective, yes, one can sell at around 40.85 or 4100 levels with a small surplus to be placed at 41.50 on higher side for the downside target of 48.10 and 39.70. This is the only correction. This is the correction which we are looking for next couple of days. And overall, looking at the chart, it seems that for next couple of months, if we see such correction, then it should be used as a buying opportunity for the upside target of 4,400 levels. But purely for a trading perspective, for next 2 to 3 days, one can initiate sell positions.
Okay, all right, Sumit as well as Manisha, thanks so much for joining and giving us those details. By the way, we have more details coming in from PNB. 9-month fresh slippages numbers coming at around 11,000 crores, and given the 6-month number of around 9,500 crores. So we'll keep an eye out on those numbers. But